Good morning. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. Japan powers Asian stocks higher while US futures gain after another record close for the S&P 500. Investors look ahead to Jerome Powell's testimony to Congress and any guidance on Fed rate cuts. The NATO summit begins in Washington today. All eyes on Joe Biden as the president and the White House tell Democrats to stop the infighting over his re-election campaign. Plus, chipmaker TSMC briefly joins the $1 trillion club on the back of an AI stock rally in the US. US stocks closing above 5,570 on the S&P yesterday. Modest gains, but again, a fresh record, the 35th of the year. Morgan Stanley's Mike Wilson, though, suggesting that a 10% correction is in the cards, given the risks around the elections and also earnings, of course, that season, the earnings season kicking off on Friday. Currently, though, as we lead up to the open in Europe this Tuesday, you're looking at gains coming through for the FTSE 100, up 0.1%. European stocks, the benchmark looking to losses of 0.2%, so a divergent picture there. And France, of course, could be a factor. S&P futures looking to build on the gains of yesterday, pointing higher by 0.3%. NASDAQ as well, pointing to gains of 80 points. Interesting to see Nvidia upgraded by UBS, and that was a gainer yesterday in the US session. And the Asian markets benefiting from the play around semiconductors once again. Let's flip the board and look cross-asset then. We, of course, focus on the yield space, the benchmark 10-year stateside, as we build up to that testimony from Jay Powell, kicking off today, ending tomorrow as well. Will he give guidance in terms of the view around rate cuts, with markets now pricing in a 70% chance of the first cut coming through in September? The 10-year currently at 4.28, euro dollar at 1.08, currently looking to modest gains of about 0.1%. Brent crude $85 a barrel, a bit more stability around oil as Hurricane Beryl doesn't cause as much damage as maybe some had feared, particularly around Texas. Gold at 2,368, again there, 0.4% for the yellow metal. Let's cross over to Singapore now, where Avril Hong is standing by for a check on those Asian markets, and the gains coming through quite pronounced for Japan, Avril.
Absolutely, Tom. Look at the Nikkei, not to be outdone by the S&P 500. It is on its best performance, biggest gain since April. If it closes at this level, we're going to see yet another record high. This year, it's gained about 20+%, fueled by the cheap Japanese currency, improved corporate governance, but of course, part of it underpinned by the preference towards the Japanese equities versus their Chinese counterparts. Today, we're seeing Chinese stocks languishing, continued underperformance. You can pick your bearish driver, whether it's the uneven recovery in China, geopolitics. Let's flip the board, because that concern about the Chinese economy is part of what's fueled the China bond rally, and authorities there have been taking steps to kind of cool it, right? Yesterday, it said that the PBOC was going to add those repo operations. It might well be towards addressing liquidity issues, but the takeaway for investors seemed to be that they were addressing the rally in the bond markets, and there was a heavy sell-off that we saw on Chinese bonds. Now, we are actually seeing the dollar China ticking higher as well as investors shift their focus towards what we're going to get from Jay Powell. The dollar has been climbing. This is perhaps, that concern that he might not be as dovish as some might like. Tom.
Avril Hong, thank you very much indeed with the important check on the Asian markets. Joining us out of Singapore, Avril, thank you. To the US now, and of course, still, of course, on Joe Biden and the pressure that the president remains under. New York Democrat Alexandra Ocasio-Cortez, AOC, of course, and other progressives in Congress are actually standing by President Joe Biden, even as voices across the party call on him to step aside. Biden maintains he is the best candidate to beat Donald Trump. Let's bring in Bloomberg's EMEA News Director, Ros Mattison. Ros, let's start with AOC then and the endorsement coming there. Is it a surprise that the progressives in the party seem to be lining up behind the president at this point?
Well, it's interesting because he's had a bit of a fraught relationship over the years with the progressives. They've been quite critical of him and some of his policy making, but it seems as though they've really fallen in behind him, at least for now. And that's for a number of reasons. Potentially the biggest one is that they're just concerned that this is giving a lot of oxygen to the campaign of Donald Trump. They're saying there really needs to be better party unity at the moment, because all this really is kind of red meat really for the mill, for the Republicans and for Donald Trump's campaign. It's giving all the airtime to the question of Biden's durability as the candidate, potentially as another president. All the narrative around Joe Biden now is just about his health and his age. And they're saying we need to stop this because we're only a number of months from an election, and all this is doing is feeding the rumor mill for the Republicans. And they're also indicating they think this is part of some kind of right-wing conspiracy. So it's interesting to see that. But at the same time, as you say, Joe Biden is still facing those questions. He still has quite a few numbers in the party who are saying, is this the time for him to step aside? Are there questions about his durability? So this narrative is not yet going away.
Ros, where do the donors to the Democratic Party stand at this point? Are we seeing a split amongst the major donors? Do they have significant influence at this point? What is the story there?
Well, it's interesting because some of the big donors have been trying potentially to raise money behind the scenes for alternate candidates, and they're also whispering in the ear of each other more than others, saying that they think maybe Joe Biden needs to step aside. But interestingly, some of the key donors that we've spoken to, particularly in the private sector, are saying they feel that they're not really in a position to influence Joe Biden in this decision, and they're just sort of like from the sidelines at least expressing their view, but also saying with some frustration they don't feel that they have a voice in the room on this with Joe Biden. He does have a large war chest to hand already. He does have a lot of money at his disposal. And also, again, they're a little bit concerned, no doubt, if they push this too far and you get to a point that you've got significant Democrat infighting that's going on for months through the convention. Is there a real competition to replace Joe Biden? Does that leach into September or even later? And what does that do really, again, but just pave the runway for Donald Trump? So you are seeing some caution there amongst the donors also.
And Ros, it is a NATO summit today in Washington. Presumably the spotlight will be once again on Joe Biden, his performance there. What are you and the team going to be watching for? How significant is this event for the president and also as well Macron, Keir Starmer, his first international summit? What are you going to be looking for?
Well, it's interesting because this meeting is about an opportunity to show, again, strength and unity for NATO against Russia, against China. But instead, all the optics are going to be about some of these individual leaders, as you say. Does Joe Biden manage it as the host of the meeting? He's got a dinner at 8 o'clock. He's even said to him, publicly that that's past his bedtime. He'll have a big press conference later in the week that he has to host. So questions about that. You've got Emmanuel Macron coming to the meeting after the weekend second round of the French election. Again, he's got to now manage a tricky formation of a government in France with the right and the left. So he's arguably weakened and distracted. You've got, the German leader Olaf Scholz coming off the back of a pretty poor showing in European parliamentary elections. You've got a brand new UK leader, Keir Starmer, who had a very big win in the UK, obviously only a week or so ago, but he's a brand new leader on the global stage. So you've got a lot of optics around how are these individual leaders going to perform and how much are they going to be distracted by the pull of the events at home.
OK, EMEA News Director Ros Mattison, thank you very much indeed. With an excellent setup ahead of that NATO summit and the continued scrutiny, of course, of Joe Biden. Now, US lawmakers impatient for interest rate cuts will get their chance to press the Fed chair on their home turf later today. That's as Jerome Powell heads to Capitol Hill for 2 days of testimony. Joining us now is our MLive strategist, Mark Cranfield. Mark, to some extent, the investor community is sitting on the sidelines ahead of this event for maybe looking for some clarity. Do you expect Powell to kind of lock in the September cut with his views outlined over the next couple of days? And which assets do you think are most likely to move around this?
So it'll be bond traders and currency traders will be the people really glued in to what he has to say. And he wouldn't need very much for him to move the dial so that the September meeting is priced in. It's only 5 basis points away. And the chances are that he's going to lean slightly dovish because he recently brought up this thing again about the deflationary impact. It's something he's used before. He got very excited about it towards the end of last year. We saw what happened in the first quarter. We actually had 10-year yields go below 4%, and we've got a way to go before we get back there. So from the bond trader's point of view, all he has to do is sound a little bit dovish, and they've got plenty to run for. And it's a bit ironic, really, because it was only just at the last meeting that the Federal Reserve change the dot plot outlook to just one interest rate cut this year. And here we are. We've got 2 rate cuts fully priced in before the end of the year. And by the time Powell has finished and the inflation report later in the week, we could be looking at 3 interest rate cuts, back to where we were right at the beginning of the year. And there is lots of room for the Treasury curve to move off the back of it. As far as the dollar traders are concerned, probably it's going to be a little bit discretionary between currencies. One of the outstanding ones is probably the British pound. That looks a lot cleaner since we had an election where there was a clear result in that. People are probably quite bullish on the pound. But if you look across, the euro's obviously got some headwinds with France. Look at what China did today with the fixing. Surprisingly high dollar yen yuan fixing. So clearly China is not ready to turn its currency around. So there's a bit of a mixed picture there. But on balance, there's probably room for the dollar to go a little bit lower, particularly because of the pound, maybe the Canadian dollar and the Australian dollar as well. But the clearest result, most likely, is going to be in the rates market, and people are putting their toes in the water. But if you look at the shape of the curve, it's already inverted, but not by as much as it was early in the year. There is certainly room for that to move, and quite a bit, by the end of the week.
OK, MLive strategist Mark Cranfield with a setup there for Jay Powell. And the testimony, of course, kicks off on Tuesday with a focus and the lens on the dollar, but also, of course, Treasuries. Currently 428 on the US 10-year. And Mark suggesting there could be further moves into Treasuries on the back, of course. So that testimony and the inflation data that comes out on Thursday. Mark, thank you very much indeed. Here's what else to be thinking about today. The new British Parliament will sit, of course, for the first time since the election and the results that came through, of course, with that commanding majority for the Labour Party. And, of course, very big gains coming through for the Liberal Democrats as well, with more than 70 seats. Reform UK as well, notching up 4 or 5 seats, as did the Greens. So we'll look at the British Parliament sitting for the first time, of course, since that consequential election outcome. 3 p.m. UK time. Jay Powell, of course, the testimony that Mark was walking us through. Yellen also, of course, the Treasury Secretary, will be testifying as well. So investors will be scrutinising the language from both of those key participants. And then later in the day, the US will be auctioning off a 3-year bond. So we'll test the appetite. So far, appetite for US debt, sovereign debt, has been relatively well received. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to D8YB Go, of course, on the terminal to get a roundup of some of the key stories. Of course, there's Joe Biden front and centre still as that debate rages around his position leading up to that election in November. Coming up, the UK Parliament sits for the first time, as I mentioned, since the election today. We're going to preview what to expect then from the Labour Party's first 100 days in office. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, the UK Parliament sits today with a fresh cohort of lawmakers following, of course, last week's general election. Yesterday, Chancellor Rachel Reeves vowed to get Britain building again as she unveiled a slew of planning reforms.
Sustained economic growth is the only route to the improved prosperity that our country needs and to improve the living standards of working people. Where previous governments have been unwilling to take the difficult decisions to deliver growth or have waited too long to act, I will not hesitate. Growth was the Labour Party's mission in opposition. It is now our national mission. There is no time to waste.
OK, let's bring in Bloomberg's UK correspondent Lizzie Burden. Lizzie, we knew that planning and reforming of planning to get Britain building, as they would describe it, was going to be central to this new government. Was there any additional detail, any surprises that came from this speech?
I think the whole point is that there are going to be no surprises because Labour wants to show that they're delivering on what they promised in the campaign, which means stability, which they hope translates into an outperformance on growth. Of course, lots of economists say that their 2.5% growth target is unrealistic. It's a dream. But you heard the first female Chancellor, Rachel Reeves, there talking about how growth is the focus. And as she says, part of that is going to be getting more homes built. Now, you've got a green belt in the UK. This is the countryside that's around towns and villages and cities. It started in 1938. It now covers about 13% of England's land, and Labour says you've got to build on the less attractive parts of it to get this target of 1.5 million homes in 5 years. Now, you can imagine all the newly elected Labour MPs wincing at the idea of having to go back to their constituents and tell them that in your backyard new homes are going to be built. But you can't say that Labour doesn't have the parliamentary mandate to do this. And we've talked a lot about the state of the UK housing market, the inaccessibility to the property ladder to younger and poorer Britons. So this is Labour really trying to grasp the supply side mantle.
OK, so that's on reform around planning and the implications for the house building targets of this new government. What other policies are we expecting, are you looking for in the next 100 days from this government?
Well, there should be no surprises because Bloomberg had the scoop on lots of these plans for the first 100 days well in advance. And of course, Labour's had this 20-point poll lead for many months now. So they're very prepared for government. Keir Starmer made this speech over the weekend setting the tone, saying that he's restless for change, and some of the things that we're expecting in this initial period are Great British Energy, a public company designed to spur investment in clean energy, a new border agency. This is to partly head off the threat from Nigel Farage's Reform UK party, which of course inflicted much of the damage on Rishi Sunak's Conservatives. Now Farage says he's coming for Labour. And we're also expecting a task force to advise on a national wealth fund. But, of course, Keir Starmer's been on this tour of the devolved nations of the UK already. Today he heads off to Washington for the NATO summit. He's going to be sandwiched between the US, Biden, and Ukraine, Zelensky, when he's at the table. And it will not have gone unnoticed that he is firmly sticking to his commitment to only spend 2.5% of GDP on defence spending when the fiscal situation allows. So potentially a point of contention with diplomats in the room. OK, so on the diplomacy and on NATO and British support for, of course, that organisation, but also the policy priorities domestically and setting us up with what to expect. UK correspondent Lizzie Burden, thank you very much indeed. Coming up, we're going to switch focus because the relentless AI rally has helped TSMC's ADRs, so the listings in the US, hit $1 trillion in market cap. We get the analysis next on that story and what's driving the continued optimism around chip makers and foundries like TSMC. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Tuesday. Now, ADRs in chipmaker TSMC briefly hit a market cap of $1 trillion on Wall Street overnight, driven by booming demand for AI. Bloomberg's Annabelle Drulas joins us now for more on the key milestone. Annabelle, could there be further upside then? What's propelled these gains for TSMC?
Well, I think there can be further upside, and really what has propelled them so far is really the AI demand that we're seeing, because NVIDIA, or TSMC rather, is in a really important position here, being the sole supplier of very important AI chips to NVIDIA, also Apple, other players. And so that's really underpinned the gains that we've seen in the stock so far. Yes, it was that milestone overnight. So we had an upgrade that came through from Morgan Stanley. They lifted their price target on the stock by about 9%. And so it briefly topped there, you can see $1 trillion. It's important to note these are the ADRs. They do actually have a listing, TSMC, in Taiwan, but the ADRs do trade at a slight premium a lot of the time, even though they largely move in tandem. But the premium is because those shares are a little bit more accessible to foreign investors. But taking the gains so far this year, Tom, to around 80%.
Yeah, and briefly overtaking Berkshire Hathaway, with the context, of course, that you put in terms of the premium that you get in the US versus their Taiwanese shares listed in Taipei, of course. When it comes more broadly, Annabelle, you monitor this sector very closely in terms of sentiment around AI, the theme and expectations that has further to run. Where are we in terms of the gap between valuations and sentiment around that AI theme?
Yeah, well, there's lots of different views that are coming in on this all the time. But Citigroup, for instance, is one of the latest here, saying that actually AI stocks are now the most stretched going back 5 years. What they're measuring this is on the basis of about 60% of the market cap of such names have market implied growth rates that are running above consensus. So that indicates perhaps that we could see a little bit of rebalancing coming through in the sector. They're advising Citigroup to just continue to take profit, for instance, from the AI high flyers, ones that are well known to us in the chip space, for instance, and then to rebalance a little bit across the AI value chain. There are lots of different other beneficiaries. We talk about perhaps the infrastructure that surrounds AI. There's data center providers, there's utility stocks. All of those can gain. It is worth pointing out, though, of course, that Citigroup has that call out, but we continue to get more. And NVIDIA, for instance, trended a little bit higher on Wall Street overnight, and we did actually see UBS, for instance, raising its price target on the stock from around 125 to 150. Wolf Research is another that's upgraded its target, so it does continue to be that optimism, particularly for NVIDIA, around the Blackwell server rack.
OK, Bloomberg's Annabelle Drulis, thank you very much indeed with the update, of course, on that AI theme and the stretch valuations that some at least flag. But, of course, the TSM story as well, TSMC story, powering ahead with that $1 trillion market cap, at least in terms of ADRs. Now to some other stories making news today. Hungarian Prime Minister Viktor Orban has met with Chinese President Xi Jinping during an unannounced visit to Beijing. This just days after a similar surprise trip to Moscow for talks with Vladimir Putin. EU leaders have sought to distance themselves from Orban's shuttle diplomacy, which comes as Hungary takes over the bloc's rotating presidency. And Microsoft has told employees in China that from September they'll only be able to use iPhones for work. According to an internal memo, the measure is part of a company-wide effort to protect against hackers. Google Play is not available in China, leaving Apple's App Store as the only place Microsoft employees can download mandatory security apps. Chinese EV maker BYD has signed a deal with Turkey for a $1 billion factory. The company wants to produce 150,000 electric and hybrid vehicles each year in the plant, which also includes a research and development centre. The move could bolster the Chinese automaker's foothold in Europe. While Turkey is not an EU member, it has a customs deal with the bloc. And zooming out, but with the lens still on China, we focus in on the Chinese bond market, which has seen some remarkable moves in terms of lower yields, higher price, the demand, the expectations that the economy, continued slump, of course, in the economy, expectations that maybe there'll be some policy that comes through from that important plenum that, of course, starts next week in China. You did see, though, the one-year bond yield move higher, so better selling pressure at the front end. New tools being pushed through by the Central Bank of China, the PBOC, with a new repo tool. And so we continue to watch the implications of that in terms of the demand that we've seen for Chinese bonds, yields getting to record levels in terms of record lows. But you have seen the one-year bond yield jump just recently on the back of some of these changes coming through from the PBOC. This is a story we'll continue to monitor for you, of course. Coming up, France enters uncharted territory after that snap parliamentary election results in a political gridlock. We're going to take a look at the talks for a new prime minister, the time frame, the potential combinations, and what it heralds for policy coming out of any new government of France, and indeed what it means for President Emmanuel Macron. That is next. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Japan powers Asian stocks higher while US futures gain after another record close for the S&P 500. Investors now look ahead to Jerome Powell's testimony to Congress for clues on Fed rate cuts. The NATO summit begins in Washington, overshadowed by the controversy surrounding Joe Biden as the embattled US president continues pushing against Democratic infighting over his campaign. And Bloomberg learns that Boeing is in talks to preserve US defense contracts after pleading guilty to criminal charges linked to fatal plane crashes. Meanwhile, Airbus logs its best month of deliveries this year. Let's check in on the markets. There's a split in terms of the views and the sentiment around European markets versus their US counterparts. Yes, we had another 35th record for the S&P, 35 so far this year, and US futures are pointing to build on that today. But European futures are a little soggy, and maybe the French risk remains on the back of people's minds. European futures then pointing lower by 0.2%. Here in the UK, though, slightly different story. FTSE 100 looking to add 9 points. S&P futures, as I mentioned, looking to add 12 points on the back of that record yesterday, closing above 5,570. Nasdaq futures getting a lift as well, pointing higher by 67 points, up 0.3%. Let's flip the board and look cross-asset. Big day, of course, for Jay Powell and the team at the Fed, with the testimony kicking off today, and whether or not investors get some clarity in terms of the next steps. If he leans in, the Fed chair, to the market view that there's a 70% chance of a rate cut in September, and to what extent we're going to see some volatility around the Treasury markets on the back of that. So we're looking at the Treasuries, of course, the benchmark 10-year 428, euro dollar at 108, little bit of strength coming through for the euro, currently up at just shy of 0.1%. Brent $85 a barrel, down 0.2%, continuing to monitor, of course, the fallout of Hurricane Beryl, and gold posting gains of 0.3%, 2,365 for the yellow metal. Now to the politics of France, and French lawmakers are preparing to begin negotiations over the next government after the country's inconclusive parliamentary election. President Emmanuel Macron has met with lawmakers from his own party, that's as representatives from across the political spectrum take stock of the situation. Let's cross over to Bloomberg's Caroline Cornin for the latest then. Caroline, when will we know the name of the new Prime Minister? What is the time frame we're looking at? Attal is staying in a caretaker role for now. What is your expectation in terms of timing and who the new PM could be?
And that could actually take some time. Gabriel Attal handed his resignation to President Macron yesterday. That resignation was refused. Macron asked Gabriel Attal to stay as long as it was necessary for the moment. We don't exactly know whether that means July 18, when the new National Assembly reconvenes for a period of 2 weeks, or whether that means the opening of the Olympic Games on July 26, or whether actually that means the end of the Olympics, middle of August, or even the end of the Paralympic Games in September. So it could take a few days, it could take a few weeks. The new Popular Front came first in this election, so they argue that the new Prime Minister should come from the left wing. A few names are circulating, some names from the Greens, for example, the Green leader Marine Tondelier or the Green Senator Yannick Jadot, who said that the left wing will actually present a name by the end of this week. You have some other options among the socialist ranks, for example, the one who led the campaign for the European Parliament elections, Raphael Glucksmann, or perhaps an alternative name outside of these elections would be Carole Delga, the president of the Southwest region, also a socialist and a female leader. So a lot of unknowns here, but of course no one has the majority, and within Macron's camp they are hoping that the longer it takes, the more likely the union of the left will implode, and the far left side of this union of the left will actually be sidelined, even though Jean-Luc Mélenchon, of course the firebrand leader of the far left, is hoping this alliance will stay together. Many Macron's MPs also who were re-elected in a struggle also have not forgotten that they were re-elected with the support of the left wing.
Yeah, and talking of the left then, Caroline, and we both listened to this speech, and it was a fiery speech, once again, typical Mélenchon style. And he said, we will implement our entire programme, and essentially nothing less than the entire programme. Is that feasible from this far left part of the political makeup now in France?
Of course, if he implemented the entire program of the left wing, that would be very costly and not very market friendly. In fact, we heard from the MEDEF business lobby yesterday, who was saying that they are concerned about a lasting institutional chaos because the program of this left wing includes some measures such as cancelling the pension reform and lowering the retirement age back to 60 years old, also blocking prices of some essential products, increasing the minimum wage, and ending all trade deals. The Institut Montaigne think tank has estimated the cost of this program at 179 billion euros. But you have to bear in mind that the left wing doesn't have the majority either. So clearly, this is very unlikely the entire program will be implemented. It will probably be watered down. At the same time, it's also hard to see any major economic reform over the next 3 years until the next presidential elections in 2027, or at least until next summer, because Macron can actually call new snap elections as soon as June 2025. For now, the pro-business era of Emmanuel Macron seems to be over. You see the front page of Les Echos newspaper this morning. Companies, the great fear of instability. So still a lot of uncertainty in the executives' minds here in France.
Yeah, that headline says it all, doesn't it, for the business community. Bloomberg's Caroline Conard, thank you very much indeed, following all of the twists and turns of the French political circus for us. Caroline, thank you. Let's bring at this point then Arnaud Girod, Kepler Cheuvreux head of economics and cross-asset strategy. Arnaud, thanks for joining us this morning. I was speaking to the CIO of Candriam yesterday, Nicolas Forest, and he said to me, France is now the sick man of Europe. Do you agree?
Good morning. Well, I don't know how many sick men do we have now in Europe. To be honest, is it Spain? Is it Germany? With a very fragile coalition, their finances are in order, but France has been outperforming Germany on GDP growth for the last 4 or 5 years. So Europe overall, I think, is in trouble.
What then should the message be to your clients, Arnaud, to investors who have exposure to this region or are thinking about getting exposure to this region? What do you need to be doing if you are in that position, given the risks that you've just underscored for us?
Yes, thank you, Tom. It's a great question. I think there are several things you can do if you're forced to invest in Europe. First, you can look for areas such as Switzerland or the UK. I think is a good alternative for more stability, but also sectorial exposure in those indices in the UK and Switzerland that I think are preferable, in the current environment. So more global exposure. In the UK, you have a global exposure which is very much commodity, staple oriented. Or you have the Switzerland case where you have a lot of pharma, a lot of global leaders, and you will be able, I think, to navigate this period of uncertainty better, because unfortunately it's not only about local political outlook, it's also about how the US is going to shape the European partnership and the global trade war in the next few months.
Yeah, very interesting. And I want to get your views on that. But before we do, Arnaud, in terms of the risk premium now being priced into French assets specifically, what is the political gridlock premium that should be priced? Do you expect to be priced into French assets, particularly when we're thinking of the spread?
Yeah, so I think this market is interesting because it has seen a lot of different other scenarios where you had political instability and populism rising, and so this market has been used to that, and I think that's why it has been very reasonable in the way it has been pricing the risks in France. So we've seen only a very marginal increase in the bond market risk premium for France, and of course now this voice, I call it the fourth voice in the French Parliament. We have 3 blocks: center, far right, and the left, and I think the fourth voice now is going to be the bond market. So this voice has been very quiet, and the danger, I think, is that this summer, maybe in August, we will have this voice getting louder if the left is going in the wrong direction.
Fascinating. OK, so the fourth voice of the bond market may be raising the volume in August. I wonder to what extent US politics, and you nodded to this, will tie into that, Arnaud, in terms of how investors should be thinking about a Trump presidency and what that would mean for European asset exposure.
Yes, so you see, Europe is more than ever tied to the fate of the US. It is very weak politically speaking, Europe, and so US are going to I think shape a lot the future of Europe. And here, if you go in the direction of a vote for Trump, as the odds suggest, of course you have this risk of a global trade war. That Trump is putting on the table, and you have the end of the war in Ukraine. I think in the case of the war in Ukraine, whatever happens there, Europe will be forced to invest more in defense, whatever happens, and I think that's pretty clear. But the big risk is the global trade war. Europe has a big, a trade surplus with the world. So if Trump, if you want, triggers a trade war, it will be very difficult for Europe not to react one way or another against China. The other countries in the world will also react, in my view. It's not just Europe, but maybe LATAM will react as well. And so you don't really know how all those trade policies will eventually, protectionist policy will eventually affect the European businesses that are exporters.
Okay, Arnaud Girod, Kepler Cheuvreux, head of economics and cross-asset strategy. Some really interesting takes on some of these political risks, the here and now, and looking ahead to November as well. Thank you very much indeed. Coming up, United Airlines says another of its Boeing aircraft has lost a wheel after takeoff. We're going to bring you more on that story and the implications for the broader industry. That's next. This is Bloomberg. Welcome back. Now, traders will be watching, of course, Jerome Powell's testimony to Congress for signs that the Fed may be shifting closer towards a September rate cut. This ahead of US earnings season, which kicks off, of course, on Friday and then pushes into next week as well. Let's bring in Sunaina Sinha Haldea, Global Head of Private Capital Advisory at Raymond James, with a global view on what's happening. But we'll start with the Fed and what to expect from Jay Powell. Is this a Fed chair who's going to lean dovish in this testimony that is going to reinforce the bets for a September cut?
Well, we can certainly hope that he goes that way, but so far history has proven otherwise. He's continued to keep the message very much on stay the course, on tightening, that they will not take easing very lightly. Why? Because the markets are already pricing in the cut. The markets have done the job for him in advance of the easing message. So he doesn't want to go too soon with signaling a dovish Fed. I doubt that he'd do that this week, but we shall see. I think the reality, Tom, that I'm watching is that the U.S. economy might be slowing a bit faster than he expects, that many have expected. I think the ISM data last week was a big telltale sign for many of us when we looked at services, both the activity and the absolute levels. That's not a good sign as we think about what's going to happen in the coming weeks and quarters.
Well, what on that point, what breaks first in the U.S.? Is it inflation or is it jobs?
Well, I think the unemployment rate is already at 4.1%. That's higher than the entire year's target from the Fed's outcomes for 2024. So when you look at that and you look at the fact that you've got an economic reality that is decelerating, one has to think the Fed has to start loosening in September, at least one, if not two cuts this year. However, this is a Fed that was very late to the party on the inflation genie. Putting it back in the bottle took them a long time. They're likely to be much more cautious than any of us would like when it comes to loosening again. How supportive will that one cut be for the equity markets? We have Mike Wilson of Morgan Stanley saying a 10% correction is in the cards for this equity market. Does a cut in September put that to one side? It doesn't put it to one side because that cut in September is very much priced in. The probability of that cut is north of 70% in the markets now. So the markets expect at least one cut. They'll have to go a little bit beyond that in order to completely take away any downside risks. I think, I see where he's coming from. Look at the PE, Case-Shiller PE metrics now. They're all at record highs. One doesn't know whether you can enter. What's a safe entry spot for the markets today in terms of the U.S. equities because of the levels at which we're at? Defying gravity. Do you stay invested in US equities? Do you look to add? Are you starting to cycle out of US equities into other regions? What do you do with that story? Well, I think what you do with that story is you certainly think about relative valuation advantages in other markets. The FTSE is a great buy on a relative basis. The stocks is a good buy on a relative basis. So you to put some relative value bets in other parts of the world where there is a stronger growth story or certainly more upside and less downside. The other thing you do in the US market is you potentially cycle to stocks that do better in a slower growth environment, lower inflation, lower growth environment. These are for defensive sectors like utilities, communication services, and so forth. Those are better bets on a relative basis than tech, which is incredibly overvalued. Do you sell tech? That's a $64,000 question. Yeah. But you certainly think about more defensive plays.
OK, interesting. So defensives, you're looking at utilities, communication services, maybe real estate as well, was on your list. This is one line that jumped out from your notes to us. Any equity pullback will be short-lived unless credit markets start to sense risk. How do you tie that into the earnings story that we're looking for? Things kick off on Friday, but you have a lens on the credit market and the linkages between credit and equities.
Indeed, and certainly the private equity market where I play has a lot of linkages to credit, as a lot of these transactions have debt on them. Now, if you look at credit spreads, they are so thin, they're back to 2020, 2021 levels. It's as if the last 4 years didn't happen at all. And that's a sense of, where the VIX is. The VIX is incredibly low. All this geopolitical macro stuff has not really disturbed the equity story and the credit story at all. Now, that comes with some risks associated with it. You've seen consensus EPS come down over the quarters. We'll see how this earnings season goes. But you've got companies now signaling a picture that is a more decelerating picture overall. Now, what does that mean in terms of debt servicing costs? They still remain pretty high. If you're a private equity-owned company, you have the advantage of your private equity owner negotiating with the banks, negotiating with private credit lenders to try to reset your debt. If you're doing it in the public markets, you better make sure that your servicing costs are met. Otherwise, you will see your spreads go back the other way. Otherwise, it's a great time to go and do some debt issuance, which is what a lot of companies are pursuing.
Yeah, we've seen that, haven't we, come through in the markets. Sunaina, thank you very much indeed. Really fascinating takes then on these markets. Sunaina Sinha Haldea, Global Head of Private Capital Advisory at Raymond James, with the call that maybe you want to be taking a bit of a defensive tilt when it comes to the US equity story with an eye on utilities, communication services, real estate, the UK as well, potentially part of the mix. Sunaina, thank you very much indeed. Now, to a corporate story, of course, of importance. United saying another of its Boeing aircraft lost a main landing gear wheel, just a wheel, don't worry about it, on takeoff, a near repeat of a March incident. Our global aviation editorial leader, Benny Camel, is across all of this for us. Benny, what is going on? Wheels falling off aircraft? I mean, the fact that this isn't the first time we've talked about this is remarkable. What is behind all of this?
Yes, good morning from Berlin. So this is eerily similar to an incident we had a couple of weeks ago. Again, a wheel falling off the aircraft. Now, a lot of people will be reading this and be saying, oh, it's Boeing again. But to be fair, this is an out-of-production aircraft. It's a 757. And really, this is sort of more on United than Boeing. It's a maintenance issue. It's up to the airline to fix these planes to make sure they're in good nick. But, obviously, the Boeing story has been a big one over the last 6 months, and a lot of people are slightly wary of that plane maker and the quality of its products. But for the entire industry, it's not a good look. You don't want, as you say, wheels falling off or anything really falling off an aircraft. This is now being investigated again by regulators, by the FAA, and United was already a bit in the hot seat for this previous incident, and there's obviously a much closer look being taken at the industry and at United in particular to make sure that their aircraft are in good shape.
OK, that's really important context, in fact, in terms of maybe the blame lies more with United and the FAA versus Boeing on this particular issue. But on the Boeing story, Benny, where do we stand in terms of their negotiations and particularly when it comes to defence contracts?
Yeah, so we had a very busy 24 hours. They got the agreement with the Department of Justice over the line. They pleaded guilty, and now that really gives the company a little bit of clarity, and investors, crucially, a little bit of clarity into sort of the latter part of the year. The first half of the year really forgettable for Boeing. A lot of issues there that they need to clean up. The big question that remains for the company is now, who's going to do that cleanup job? Who's going to take over from Dave Calhoun, the CEO? That's the one big question we have no clarity on at this point, and there's no obvious name out there as to who will that be. That will probably be a big catalyst for the stock if they choose the right person. You've seen the shares go down quite substantially in the first half of the year. So that's really what people are focused on right now into the latter part of the year.
And Benny, we've had an update in terms of numbers from Airbus.
Yeah, so Airbus shocked everyone last week with a pretty epic profit warning. They downgraded a lot of their targets and said, you know, that we're having real issues not on the demand but on the supply side. And then yesterday they came out with their monthly numbers on orders and deliveries, and that was actually a fairly upbeat number. They delivered 67 planes in the month of June, so the highest monthly tally so far. So it seems like they're getting, you know, a handle on things. If they can sort of maintain that trajectory, then people will be somewhat relieved. We're getting the numbers from Boeing later today, so it'll be interesting to get that read across. Again, the Boeing numbers have been much lower because the company has really cut back on its output. But if, again, you can see something of an uptick there, investors will be happy to see that.
Global Aviation Editorial Leader Benny Camel, thank you very much indeed with the latest in terms of Airbus and, of course, United and Boeing. We appreciate it. There's plenty more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Let's reflect on another record high for the S&P. It feels a bit like Groundhog Day, doesn't it? But there is an importance here, given some of the themes that are leading to these consistent records. 35 record highs year to date for the S&P 500, back above 5,570 for the first time. And this is the context in terms of the number of record highs coming through from the S&P historically, going all the way back to the 1960s. And you are, at this point, if things continue this way, set for potentially the third largest number of record highs from the S&P ever. And so that's where we are in terms of the bar chart reflection of that story. The earnings story, of course, AI, the strength around the US economy, all of this whilst Morgan Stanley's Mike Wilson warns that maybe we're set for a 10% correction. So we'll see if it has legs, but that is the context. The opening trade is next. Stay with us. This is Bloomberg.